4 years ago, my friend introduced me to special funds, but I was skeptical about investing in special funds because they really promise higher returns. But after doing more research and learning about special fund, I took a leap of faith and started investing in special funds. And so far, I've had a positive return. So in today's video, I'm going to share with you 7 things that you need to know before you invest in a special fund here in Kenya. So for beginners who don't understand what a special fund is, a special fund is just like a unit trust or a collective investment scheme, just like money market, fixed income funds, balance funds, or even equity funds. The only difference is that they are more flexible in terms of investing in various assets like bonds, cash, equities, and even forex trading. And they have also incorporated leverage, which allows them to magnify their returns. And with special fund, they invest both in the local market and international markets. So consider watching this video till the end, because point number 4 and 5 are the most crucial things that you need to know before you can invest in special fund. So take your notebook or iPad and let's get started. So the first thing you need to understand about special fund is that they are meant for sophisticated investors, and they also have a minimum deposit. So by law, investors in special fund are required to be a little more sophisticated than those starting with money market funds. So special fund are made for people who have higher risk tolerance, while money market funds are made for those who are risk averse. So if you have higher risk appetite, then special funds are meant for you. And the minimum deposit for special fund is 100,000 Kenya shillings. For example, Kusa special fund minimum deposit is 100,000, while other special funds like Mansa X is 250,000 Kenya shillings, and Ox special fund is 500,000 Kenya shillings. And all these funds also have what we'll call top-up minimum. That is the minimum investment you can top up each and every now and then. So for Ox special fund, it's 50,000. So you should consider checking both the initial investment and also the top-up amount. Now let's go into the second thing you need to know about special fund, and that is understanding risk and return. So higher potential return often comes with higher risk, while returns in special fund are actually higher than the ones we get in money market funds. There is also possibility of getting lower returns because this involves more risk. But with special fund, you cannot lose all your money due to market fluctuation unless there is either fraud, misappropriation, or bad management. The fund is diversified across assets such as cash, bonds, equities, and others, which provide a safeguard of your investment. For example, Ox special fund aim to limit maximum drawdown or loss to 25% through hedging and diversification strategies. This means that the fund will always limit their losses so that they can keep your capital and reinvest it, even if they experience a loss. So your capital is actually maintained. Also, global events do affect performance, but due to active management and diversification, the impact of the overall fund is often mitigated. For example, if the Kenyan economy is not performing well, then international economies will mitigate the risk that we are experiencing in the Kenya economy. And the strategy being used here is in and out, that is trading over a shorter period of time where you enter the market, make profit, and you are out, rather than long-term investment, which involves buying and holding for a long period of time. So the strategy is to get into the market, make profit, and get out. And the third thing you need to know before investing in special fund is the login period and liquidity. Many special fund like Ox special fund, Mansa, the Old Mutual special fund have a login period of 6 months. That means that you need to put your investment for 6 months, not less than 6 months. For example, Etika also have a login period of 6 months, 9 months, and 12 months. And this period allows the fund managers to invest in instruments that require longer holding times, such as fixed deposit or commercial papers to maximize the returns. And that's why we have a login period. And after the login period, special funds generally offer good liquidity. For example, withdrawal in OX special fund typically takes between 48 to 72 hours. Most of the special funds here in Kenya take 2 to 3 days for you to withdraw your investment. Now let's go into the most crucial thing you need to know before you invest in the special fund, and that is point number 4, personal financial preparation. So before you invest in a special fund, make sure that you have an emergency fund, money set aside for 1 to 3 months of expenses. This ensures that you don't need to withdraw your investment if something unexpected happens. And also consider investment horizon. Have an investment horizon of at least 1 to 3 years so that you can truly see the benefits of the compounding effect from the special fund. Also, consistency. Be prepared to consistently top up your investment. Before you invest in a special fund, look for one that you can maintain the top up minimum. Like for example, OX special fund, the top up minimum is 50,000 Kenya shillings. Because the real growth and the compounding benefit come from regular contribution over time. Another thing in terms of personal financial preparation is having a healthcare insurance. Ensure your healthcare needs are covered potentially through an insurance policy to prevent having to tap into your investment for health-related emergencies. So in terms of financial preparation, have an emergency fund and also insurance cover, and also consider the period in which you want to invest. Usually it's recommended to be 1 to 3 years and above. And also consistently make sure that you make consistent top up on your investment. Another crucial point that you need to consider before investing in special fund is fees and cost. You know that these special funds are managed by fund managers, and before you invest in any special fund, know how much they charge for their management fee. Most special funds in Kenya charge between 2 to 6% management fee. For example, OX special charge 6% management fee. And these fees are higher than what you might get in the money market fund, because running a special fund requires highly experienced and specialized professional who commands higher remuneration. Apart from management fee, we have what we call performance fee. This is charged when a special fund returns perform past a certain benchmark. For example, OX special fund will charge you performance fee if the fund perform past 20% in terms of their return. So if OX special fund had a gross return of 30% and the benchmark is 20%, the extra 10% will be charged a performance fee. Another cost or fee is taxation. 15% withholding tax on special fund is often already paid as source, as the underlying assets such as bond, listed equities, cash in banks are typically taxed before returns are received by the fund. But you should always inquire more about the taxation of your special fund so that you can know your net return. Let's now go into point number 6, and that is regulation and investors protection. So before you invest in any special fund, make sure that that special fund is regulated by the Capital Market Authority. Special funds in Kenya are heavily regulated by the Capital Markets Authority, and their role is to ensure transparency, investors protection, and market deepening. The Capital Market Authority license professional approve products that are being traded on the special fund, scrutinizes valuation, and also reviews all public advertisement to ensure truthfulness. An important disclaimer you will find on investment documents required by law is Capital Market Authority does not guarantee the financial soundness of the investments. This means if a government defaults on a bond or a market crashes, the Capital Market Authority isn't there to reimburse you. So their role is to ensure the framework is sound, the investment framework is sound, and all the disclosures are clear, so that when you are making the investment decision, you already know everything that is involved in that special fund. And beyond capital market regulation, reputable special funds here in Kenya have internal risk management system, governance structures, and investment committees. And this ensures that these special funds are managed well to ensure that your capital are safeguarded. And they also have additional layer of security, that is special funds operate with custodian bank, where your money is held separate from the fund manager's operation accounts, and a trustee. So before you invest in a special fund, make sure you know the custodian and the trustee. A trustee is someone who verifies that the fund invests according to its policies, and this contrasts sharply with hedge funds often seen in the US, which are very flexible but lightly regulated. The regulation of special funds in Kenya is much better than hedge funds in the US. And our last point is market mindset. So you need to understand how the market operates. So while high bonds yields might seem attractive, economists view very high yields in bonds of between 17% to 20% as a sign of economic strain, making it expensive for government to borrow. So when the interest yields for bonds is high, that means that for you to borrow money, you will be paying high interest, and which makes it very hard for the economy to develop, especially for people who are investing in real estate. And the opposite is that when these bond yields are lower, it is a positive indicator for a broader economy because they make borrowing more affordable, and this support business growth. So always compare your returns in accordance to inflation. So as long as your returns are above inflation rate, which is around 6% long-term average in Kenya, you are beating inflation and you are growing your wealth. So understand how the market operates, and that's all you need to know about investing in special funds in Kenya. Hope you have learned something, and you can also check out this video to find out the top 5 special funds that are available in Kenya and start investing in special fund. So before you invest in special fund, make sure that you do your research, and this video is all about giving you educational content to help you start your research on special fund. So this is not a financial advice. Always consider seeking advice from licensed financial advisor when it comes to investing in any type of funds here in Kenya. See you in the next video.